Hello, everyone, and thank you very much for joining us. This is a market snapshot. We are going to be looking at the euro-US dollar. It's come under pressure over the last 2 days in particular. Parity is now in sight. I'm going to be hosting this with my fellow senior market specialist, Nick Tsaburis. Just before I bring him in, I would like to just bring up our disclaimers. I'll leave those on screen for a few moments for your convenience, and then I shall bring Nick in. Just bear with me a moment. Here's the first slide. This is our high-risk investment warning. I'll just keep this on screen for a few moments, and then I'll bring up our commentaries disclaimer. All right, thank you. Here's our market commentaries. And just finally, we'll be doing the analysis on market scope, and I'll show you the yield curve on TradingView. Just to get some sort of context, here is our euro-US dollar. This is a weekly chart. If I just point to the very last candle, you can see this is the week, a very strong red candle down. We're not oversold according to RSI, and if the stochastic showing that there is an underlying momentum, so it's looking quite interesting indeed. I've just changed this to our daily chart, and I have put this red horizontal. This is where parity is. You can see it's very much in sight. Having that context, I'd like to get Nick's opinion on this. Hello, Nick, are you there?
Hello, Russell. Good to be talking again with you on what was a significant move yesterday, a drop, and it seems to, and it actually extends today. So yeah, yesterday EURUSD had its worst day of this year and hit the lowest level since December 2002, so definitely a big level and a big move. And it didn't seem to be like a very compelling reason for that move. I mean, recession fears reignited, but it was probably, in my opinion, something that wasn't that compelling. The reason for this recession fears, it was mostly some PMIs from Europe, right?
Yeah, so what I'd like to do, Nick, I think we can look at this probably on a technical level, and I think we can obviously look at it on a fundamental level.
Yeah.
Perhaps we talk about it on a technical basis first. What's your technical analysis?
Yeah, so on the technical front, we can see that we're going towards oversold levels on the daily and on other time frames as well, but it's not that we haven't seen similarly oversold levels before. So I think there is some room for more losses. And as you said, now parity is a distinct possibility at this stage. Of course, we do not know how this will play out, but it's now definitely on the table and on the in the conversation.
Right. So I'm just bringing in the an RSI, just so you can see we're hitting actually 20 here on these settings. So there's, there's the oversold that you're referring to.
Yes, but and going back, we can see that we have seen even more oversold levels, right?
Yeah. So I'm just highlighting this for our viewers. So the idea is perhaps, if I'm understanding you, Nick, that perhaps oversold maybe meaning that a short-term floor may be near, but of course any bounce from here could very well be targeted by shorts, couldn't they?
Yeah, exactly. I mean, I would reasonably expect a rebound at some point, and from a technical standpoint, but in general, I'm not sure there is like something at this stage that could take it convincingly out of the woods. And for me, as I see things now, in general, the area above 105 looks very, let's say, unfriendly if we're looking at the upside and potential corrections.
Okay, I'm just bringing in my weekly in here. Just let me perhaps take it off logarithmic just to show you. So the 105 is where you're seeing the
around this area and
resistance.
above. I mean, there are some technical levels there, as well as a daily Ichimoku a little bit higher. So yeah, just as a technical level.
Understood. So we've broken down from these technical levels. Once we've broken down, now we've got this overhead resistance above us. The oversold level perhaps suggesting maybe a short-term bounce, but the risk of shorts targeting, as I understand. What's your view on a fundamental level, Nick? What do you see there?
I'd just like to also add another point. Obviously, apart from the technical, it's also how investors will react to a breach of technical levels. Will they see it as, okay, now let's go to a bottom, or let's push even harder, which of course no one knows how they will react, and we're also already seeing it breaching the 102 area. So that's another thing to have in mind. Now, on a fundamental level, and in regards to Parity, I have to say this. Usually, I'm a bit cautious around such proclamation, like, "Oh, we're gonna go below one, below Parity and stuff like that." But it looks like, but as we said, it's now a distinct possibility, and it looks like maybe we're going there, and we've definitely seen big moves in the post-pandemic era, and we've seen it not just on the Euro USD, but like on US oil, on WTI, it hit 0, and then it went to above 100, right? So there's definitely a greater possibility for moves that we haven't seen before.
Absolutely, and just in terms of the volatility, just over the last 24 hours, there's been extreme volatility, hasn't there? Just generally.
Yeah, exactly. And of course, that warrants a lot of caution, right, when approaching this this pair, but the markets as a whole. Now, on the fundamental level, of course, it's the whole thing about inflation, recession, and monetary policy differential, right?
Yes.
So the thing here is that in terms of recession, Europe is probably more exposed to the dangers of the war in Ukraine, correct?
No doubt, no doubt. The US certainly seems to have a little bit more, let's call it a buffer than Europe.
Yeah, and they look not overly worried, let's say, about inflation. I mean, we did see Q1 contraction, but they don't seem to believe, Fed officials, that this will repeat. And as, of course, they didn't believe that inflation was going to be a big problem down the road. So we definitely need to watch out for that. But it looks like that the Fed now pushes on with its monetary tightening, and it could potentially be less, let's say, limited by a potential recession. Now, on the other hand, the ECB is far behind. It only now sees liftoff in July. But it may be limited by a potential recession. However, for me, that's a theme that we could see playing out perhaps in favor of the euro, or it could perhaps help the euro, or maybe we start seeing some down the road, some pause for the dollar rally, because it does have more room to run. I don't know what's your take on that one.
My feel at the moment is that there is general fear out there. So if we just take a look at the yield curve, so I think the yield curve here is a strong underlying cause of what we're seeing. So
Yeah,
inverted yield curves don't necessarily mean recession, but we know that all recessions start with an inverted yield curve. So the fact that the Fed is looking for 75 this month, 50 in September, and we've already inverted, but I think that we're going to have a significant recession here, I beg your pardon, a significant inversion here. Whether it leads to a significant recession or not, of course, that is the key question. But there's so much going on, Nick, that it almost seems that there is a flight to the dollar. The dollar is the haven of the day. And I think that's very much an element of what's going on with regards to just general market volatility. What's interesting for me is now that we're starting to talk about the other fundamentals that are also impacting euro US dollar.
Yeah,
so
exactly.
Let me ask you a question, Nick. In terms of monetary policy, do you think the ECB is going to have a harder time effectively with their liftoff? We know that we'll get 25 basis points this month, but thereafter, are fractures going to occur?
Yeah, so obviously we need to also bear in mind the intricacies of how the ECB works. Like there are those that want to go more aggressively, those that want to go less aggressively, but so far they have indicated a path of 25 BPS basis points lift off in July, and then potentially higher over the next few meetings. Now, that means that if they decide to go more hawkish, that could perhaps lend support to the euro. But if they are restrained by a potential recession, fears of a slowdown, then the differential will remain in favor of the USD. I mean, the monetary policy differential. So I think the July meetings will be crucial for this to sort of get a better sense of where we're going. And of course, no one can rule out a surprise from either bank, right?
Yeah, absolutely. But I'm very much agreeing with your assessment there. The possibility of the fractures, given the heightened probability of recession on the European side, that seems to be really reflected in euro US dollar at the moment, doesn't it?
Exactly, yeah. And of course, as you said, there are many unknowns, and there are many factors that we cannot possibly know how they will play out and how this is going to affect monetary policy and thus the respective currencies. But again, the policy differential is one of the main factors here.
Absolutely. So I just want to make sure that I'm understanding you. The path of least resistance does seem towards parity. However, don't be surprised any bounces here because we are oversold. But the complexities, given the amount of variables out there, certainly seem to be playing in favor of a parity target.
Yeah, exactly. But of course, I want to stress here the point that sort of now we're saying, oh, recession, oh, US dollar is the safe haven and all that stuff. But this tends to be a little bit extrapolated and exaggerated oftentimes, since we listen to them all the time and hear about them all the time. And there's always, for me, this factor that we need to be aware of, and then maybe markets will find something else to focus on, or maybe a better, economic release will come our way, and then sentiment will change again. So these are factors that we need to take into account. But there is also another thing for me that it's crucial. Usually when we have such important moves, I tend to view it as who wants EURUSD at parity or below parity. Does anybody want this? Do governments want it? Do central banks want it? And that is, for me, something that I believe may have now changed, because we've seen EURUSD back in previous years approaching parity, but never actually hitting it. Now, I think what has changed is that maybe now it could be something that would benefit both sides, like a low level. Now will it be below parity, close to parity? But I think that the Biden administration would probably want a stronger dollar because it can help it contain inflation, which is a major headache.
Absolutely.
Although that's a simplistic view. There are so many components to it. Whereas on the other hand, and they probably don't care that much about exports, right? Which will be harmed by a stronger dollar. Whereas if we go back to the Trump presidency, the strong dollar policy was not a given, and we have seen some very good runs for the pair given that. And sorry to go on a little bit longer on that. Now,
no, please do. This is very interesting. Now, please do.
If we look at the other side of the Atlantic and to the into Europe, now if there's higher risk of recession, maybe a lower euro from the export point of view could perhaps help. So and we haven't seen any verbal interventions yet, which for me is something that I take into account.
So I just want to
you agree with me?
I actually just want to highlight your points there, just for our listeners. I think Nick's nuance here cannot be underestimated. The export market in Europe is very important. The US export market, while it's there, is much less important. And he's suggesting that in of itself may be a factor at play here. Am I understanding correct?
Yeah, exactly.
That's a really good point of view, Nick. Certainly, so the reports and the pundits that I listen to, not perhaps touching on that, and I think that is probably more important than we are acknowledging at the moment. So very, very key insight there. Nick, just cognizant of time, anything else with regards to Euro US dollar?
No, I think these are the main points of it, but I do need to stress that obviously no one has a crystal ball and no one knows what is going to happen, but we're sort of just trying to give some insights and our thoughts on what we're actually seeing right now.
Phenomenal. Nick, I want to just thank you very much for sharing that insight. I'm going to conclude it at this stage. Thank you very much for joining me in this market snapshot.
Thank you.